Whoa, guys. Chipotle is down 22% today after earnings. $32 at a $44 billion market cap. Year to date, it's down 45%. And if we take a look at the longer term chart, it is now selling at the same price as 2023. It's almost at the same levels it was back in 2021. You pretty much would have had no gains. This stock price is crashing hard, falling like a knife. Disappointing quarter three earnings. We'll take a look at the fundamentals today and some of the things that they talked about during the quarter three 2025 earnings call transcript. Does this present a compelling value opportunity for this company, especially if you are a long-term investor trading at a 50% discount from 1 year ago? Is this an overreaction to the market? Can they make a comeback? Let's go ahead and talk about that today. If you're new to the channel, please hit that subscribe button, guys. Don't forget to like, comment below if you have any questions or any videos that you want to see. But let's go ahead and check out what happened with Chipotle. All right, so starting with the quarterly data, we have total revenue and earnings per share on the top line. Latest total revenue, they posted $3 billion, which is up 7% year over year. So they still increased the top line, and they posted 0.29 cents on earnings per share, which is going to be up 3% year over year. So we currently have 9 consecutive quarters of total revenue growth. Their profit margins are still sitting at 41%. Go down to the free cash flow per share. Free cash flow posting 30 cents. It's still up 36% year over year. And cash flow from operations is still, they posted $569 million versus $446 million. That is up 27% year over year. So the company is still producing a ton of cash. It's actually one of the best quarters that they posted in their cash flows. Lastly, guys, go down to net income, posting $382 million. That is down 1% year over year. 2 consecutive quarters now of Chipotle posting negative net income year over year, but it isn't too bad. 4% on the previous quarter and down 1% on the most recent quarter 3 2025. So just by looking at these numbers, it's actually not bad at all. They're still generating a ton of cash, up 36 and 27% respectively year over year. Profit margins are still hovering around 41%, 9 consecutive quarters of total revenue growth, and up 3% on their earnings per share. And according to the latest transcript, guys, they opened 84 new restaurants this year, including 64 Chipotlanes. The company is still growing, the company is still producing cash, but the stock price is just looking really ugly. Let's just look at the annual real quick. So total revenues are still making $11.7 billion in total revenue at a $44 billion valuation, so 4x sales. So why is everyone freaking out? Well, management did make some comments about a slowdown. This is the biggest one right here, right at the open of the quarterly earnings. Third quarter performance fell short of our expectations due to persistent macroeconomic pressures. Consumer sentiment has declined sharply. We saw a broad-based pullback in frequency across all income cohorts. The low to middle income guests have further reduced frequency, and Chipotle's customers that are making $100,000 and below represent 40% of their sales. So they're talking about a huge slowdown on their main segment. Based on our data, people are dining out less, often due to concerns about the economy and inflation. Their main target customers, 25 to 35-year-olds, have slowed down. They have run out of money. They are not eating out as much. Everything is just too expensive right now. This trend is not unique to Chipotle and is occurring across all restaurants, as well as many discretionary categories. This group is facing several headwinds, including unemployment, increased student loan repayment, and slower wage growth. So right at the open, the CEO did confirm that their target customer has slowed down, which means more bad news coming for Chipotle. So what happens next? Can Chipotle survive? Let's go ahead and check out the balance sheet and see if they're going to have any trouble with staying afloat. As of right now, total cash, $1.4 billion in cash with no long-term debt, guys. Let's go all the way back to 2021 when it was pretty much selling at that same price. So in 2021, Chipotle had about $1 billion in cash. Again, no long-term debt. They're selling at the same price as we see today. Now, they're currently sitting on $1.4 billion in cash, $400 million more in cash, and they're selling at the same price. So these are things that you need to take advantage of. There's a lot of pessimism happening with Chipotle stock right now, and especially in the markets. The fact that Chipotle has no long-term debt, they're still generating a ton of cash flow. Let's see how much cash flows they're generating on a yearly. $2.2 billion in cash flow from operations. This is the biggest. Look at all that cash they're producing. 2025 is actually the best year for Chipotle in producing the amount of cash. So you're telling me this company, which has $1.4 billion in cash, the most cash the company has ever held, they are also producing $2.2 billion from cash flow from operation, the highest cash flow they are producing. In 2021, cash flow from operations was sitting at $1.2 billion. It has pretty much doubled in the past 5 years, and the stock price has just crashed to the same levels as what it was selling at in 2021. So the company's actually doing fine. Just by looking at these kind of things, guys, in my opinion, not financial advice, this looks super undervalued to me, but I would wait until we start seeing more insider buying, more stock buybacks, and a turnaround in the company's financials. So with this amount of cash that Chipotle holds, they have ample financial flexibility. They're not going anywhere anytime soon. They could fund their aggressive expansion. Here's some numbers real quick. 350 to 370 new locations planned for 2026. So if the company is still going to open up 350 to 370 new locations, this could be a chance for you to get in a company that's going to last for a very long time. The company is operating with no financial distress. And of course, during the quarter, the board has authorized an additional $500 million of share repurchases. During the third quarter, they did repurchase $687 million of stock at an average price of $42. So you're able to buy this company at pretty much a 20% discount than what they were buying it at. Year to date, they have spent $1.67 billion at an average price of $47. Chipotle's board is spending so much money buying back shares, and they just authorized another $500 million. So take a look at the insider buying, guys. There's only one guy, one of the directors, purchased $500,000 at $53. But other than that, no other directors have been purchasing shares. So until we see multiple directors purchasing shares in Chipotle stock, I won't be too bullish on the stock yet. Yes, it's sitting at a 5-year low, but I want to wait until I start seeing some confidence with the insiders until jumping in a stock like this, because there could be some further downside. Let's just take a look at institutional ownership. Whoa. Institutional ownership is sitting at an all-time high. Cash sitting at an all-time high. Free cash flow per share sitting at an all-time high. And total revenue sitting at an all-time high, while the stock is sitting at a 5-year all-time low. Can Chipotle make a turnaround? They have come out with some new items, and some limited edition meats are going to be coming out soon. They have the new red chimichurri sauce. And some of the competitive advantages that Chipotle has is their digital leadership. According to the transcript, 36.7% of sales are all digital. They have an industry-leading app and also a loyalty program that gives back to their consumers. Everything from birthday rewards, you get some points ordering burritos, exclusive offers, and special drops. They have huge brand strength. They have over 3,700 locations. They currently have huge share buybacks happening. Although those buybacks were poorly timed because they were repurchasing those shares around these levels right here, the $50 levels, they spent over $400 million repurchasing shares at $50. It is currently at $32. So it looks like those buybacks were poorly timed. But if Chipotle's management believed that Chipotle stock was undervalued at $50, then it's super undervalued now. They did destroy some shareholder value by purchasing it at these levels right here. However, they did authorize $500 million more. We have $652 million remaining in the share repurchase program. Now they could repurchase shares at more attractive levels. But is this the bottom? Is this the bottom for Chipotle stock? So can Chipotle return back to growth? Chipotle to expand to Asia for the first time through a joint venture with SPC Group. Chipotle signs development agreement with Alsea to open restaurants in Mexico. So Chipotle currently operates 3,700 restaurants as of quarter 3 2025, and they maintain their aggressive expansion plans. You got Mexico, you have Asia coming in, also Europe. For 2026, they plan to open 350 to 370 new restaurants with a long-term target of 7,000 locations in North America. Now, 76 to 80% of those Chipotle restaurants that are going to be open are called Chipotlanes, which is going to be a higher margin product for Chipotle. Higher sales volumes, better margins, improved return on capital, enhanced convenience for the customer while driving digital adoption. And so they're going to have to figure out a way to bring back those consumers. And honestly, in my opinion, they got to come out with a breakfast burrito. Why haven't they come out with a breakfast burrito? Chipotle, bring out them breakfast burritos. Sales would go up like crazy. At these prices though, guys, this looks like a great value investment to me. There's a lot of pessimism happening right now. I mean, almost at a 50% decline from its all-time high just last year. This market is pricing in a permanent deterioration in the business, while they're still expanding to Europe, Asia, Mexico, 350 new stores next year. The consumer pressure of the younger demographic should turn around once the economy gets back on its foot. They have superior fundamentals. They continue to generate massive cash flows. They hold a ton of cash. They have no long term debt, guys. No long term debt. They are free to pursue growth strategies. Chipotle, are you buying the blood in the streets? $33, $44 billion valuation. I think the market is wrong. They are pricing in the worst case scenario for Chipotle, where they never recover from this and they never go back to growth. At these levels, it looks like a great buy. But again, guys, not financial advice. These are just my opinions. This is entertainment. Anyways, let me know what you guys think in the comments below. Is this company undervalued? If you believe Chipotle will still be opening hundreds of stores in the next coming years, generating billions in free cash flow, and maintaining industry-leading margins, then buying at $33 is a steal. This is not a trade. This is an investment, guys. Thanks for watching this video, guys. Don't forget to like, subscribe, and we'll see you in the next one. Have a great day, everyone.